What if I told you you're leaving thousands of dollars on the table every single month because you have the wrong mortgage loan? I have refinanced so many different borrowers into different loan products because their current mortgage was costing them when it should have been making them money. So, over the course of the next few weeks, we're going to break down the specifics on everything refinance. We're going to dive into rate and term refinances, cash out refinances, HELOCs, HELOANs, anything and everything that would be beneficial to turn your mortgage into making you money instead of costing you money. So, what actually happens when you refinance? You're not just changing your loan. It's not a bad thing. You are literally hiring a new lender to pay off your old lender. This could be a variety of reasons. So, we're going to get into the different types right now. And then over the next few weeks, I'm going to give you specific examples of different reasons why people refinanced to make money rather than lose money. So, the first type of refinance is called a rate and term refinance. This is where you're just either lowering your interest rate or you're shifting from a 30-year mortgage to a 15-year mortgage to pay your mortgage off sooner. There is no cash out with this one. You can finance the closing cost, which we'll get into in a little while, but you can refinance a rate and term refinance and roll in those closing costs back into the loan so that you don't have to bring money to closing on a rate and term refinance. Another type of refinance is a cash out. So, what you're doing with the cash out refinance, you're just swapping your current mortgage for a bigger one. You're taking cash out and getting that cash put into your bank account after closing, and you can use that money for literally anything. We pay off debt, we do repairs to the house, we add a pool, literally anything. You could invest that money. Another reason you might refinance is to eliminate your private mortgage insurance. So let's just go over an example here. Let's say that you purchased your home 3 years ago. 3 years ago, it was worth $200,000 and you put 5% down. So that leaves your balance, your mortgage balance at 190 as of 3 years ago. Now you're paying on it, so it's a little bit less than 190 now. But 3 years have gone by, and now I look up the value of my home and it's worth $250,000. So that equity that you have, now you have more than 20% equity in your home. If it's worth $250,000, in order to get 20% equity, your loan balance has to be under $200,000. Well, it is. So that $200 a month you're paying in private mortgage insurance, you can refinance your house and eliminate that, and your note drops automatically. That is another really good reason to refinance that I see a lot because home values have gone up. Home values have gone up over the last few years and your balances are going down. If you've got private mortgage insurance on your loan, why would you not refinance to drop that off? You're going to save thousands over the life of the loan by refinancing. You save a lot more than you would spend to refinance. So that's when it makes sense. You've really got to dive into the numbers and look at the breakdown. What am I going to save versus what am I going to spend? So when we refinance, we do charge closing costs again. You don't have to pay a down payment, but there are closing costs. 9 times out of 10, your closing costs are getting rolled back into the loan so that you don't have to bring any money out of pocket. So what this usually looks like, it's usually about 2 to 5% of your loan amount is what you're going to be expected to pay or roll in as part of your closing costs. a lot of these fees, I mean, you've got your appraisal fee if you have to have a new appraisal. Sometimes you don't. You've got your title insurance and all of the recording fees and things like that. So if it costs $4,000 to refinance and you save $200 a month by refinancing, it takes you 20 months to break even. So let's go over that again. If it costs you $4,000 to refinance and you save $200 a month on your note, after 20 months, you will have broke even. So if you're refinancing into a 30-year term and it takes 20 months to break even, you've got 340 months that you're still saving that $200. That's a profit back in your pocket. So you're looking at $68,000 back into your pocket that if you would not have refinanced, you would have ended up paying. So there's a huge difference. And we'll go into detail on these later. I'm just touching the major points today. And then, we'll keep going into detail later. So I have a few really cool tools on my website. I have my website probably linked below and also in my bio. I have a refinance quiz where you can go and take 2 minutes, no credit check. You just go in there, put in your general information, and it'll let you know where you stand on refinancing and if it would be beneficial for you. Another thing that I have is my refinance watch list. So this is where you just go put your name, your email, and your phone number and what your interest rate is. And then I will watch the rates for you and notify you when it's beneficial for you to refinance. You can go on there and just submit it, and I'll probably call you just to get a little bit general idea of where you're at and what your goals are. And then we keep an eye on the interest rates for you. And as soon as that rate hits where, hey, this is what I need to save, I'll call you and we'll watch it. Or do we expect them to drop a little more? Are we going to wait a little longer? Or are we going to go ahead and lock it in? So the last tool on my website that is really, really cool and is one of my favorites is the Home Value Estimator. I actually have used this for listings, for listing agents, not for myself. I send this out to my agents when they list a house, and it gives all of the market insights on that house. So if you're looking to refinance, this is a really cool tool that we use whenever we plug your numbers in to get that true value of what your home's actually going to appraise for. So if you would like the link for that, it's going to be in the comments. You can go in there, put your info in there, and I will send you a free home value estimator for your current property. And we can keep a close eye on when it's the right time for you to refinance based off of those numbers. So we're going to end there for today. If you would like a free home value estimator, sign up for my refi quiz or my refi watch list. All of the links will be below. If you have any questions, feel free to reach out to me over the next few weeks. I hope you follow along, hit that subscribe button and follow. And we're going to go into detail in depth on all things refinance and when it makes sense to refinance. We're going to dive into exact scenario numbers just so you can get a general idea of why refinancing is not a bad thing and ways that you can refinance so that you're making money instead of spending money on your mortgage. So stay tuned for our next episode.